Listen up or run for cover. Dropping knowledge from the people who have it to the people who need it. The Real Brad Lea is dropping
What it is, Brad Lea back again with another episode of Dropping Bombs. Today in the studio, folks, I've got a real treat for you, especially if you're into making money and or starting a business. I've got Rob Luna from Fox Business up in the grill today. What's happening?
Up in the grill. What's up, Brad? Happy to be here, ready to drop some bombs.
Dude, good to have you, man. Now, folks, you guys might see this cat on Fox News all the time or Fox Business making money on Fridays or some shit like that. What's it called?
My man Charles Payne, every Friday, noon Pacific. Tune in.
Dude, that's where the experts go to talk about money and, well, you don't talk about entrepreneurship there, do you?
A little bit. I mean, we talk about, what's going on, where you should be putting your money as a business, what are some opportunities. So it all kind of goes hand in hand.
So you got your ear to the grindstone when it comes to loot.
Yeah, I mean, I've been doing it all my life. Right? I started as a risk analyst at 19 for Waterhouse. I'm a little older than 19 right now. I've been trading stocks, worked for a few hedge funds, started my own firm in '02, which I just sold majority interest to a publicly traded company in January. Ching ching.
Did you get a big payday?
Got a nice payday, but I also got a nice divorce that took a little bit of that payday.
That's all right.
Yeah, you know how it goes, buddy.
You know why they're expensive?
They're expensive.
Yeah, do you know why?
Why is that?
They're worth it.
That's true.
But you know what you're doing. You went to Wharton,
Yeah.
where the old Prez went to.
Yeah.
You've been edumacated.
Educated a little bit. Yeah.
Did you get educated on finance?
Actually, my undergrad was in psychology originally, media studies also. Then I went and did business school at Wharton, UCLA Anderson. I've got an MBA from there, and I spent some time internationally at the National University of Singapore, where I've got an MBA from there in Asian economics.
You like school then?
It's one of those things, Brad. I like education. I like knowledge, right? I think how you obtain that knowledge doesn't necessarily have to be that traditional path. Being in finance, working for a big firm, it's kind of the prerequisite, and that was kind of the path that led me out of poverty as a kid with education. But how you get that education, I don't think that matters as much as it does just to get it.
That's right. Now, how did you get your job on Fox Business?
Yeah, so I wrote this book about, 10 years ago, and it was one of those things where I went, Dan Kennedy, you know Dan Kennedy?
Yeah.
He talks about the ACE strategy, authority, celebrity, and exclusivity, and I didn't have any celebrity. I was working on my authority, and I definitely didn't have any exclusivity. So, Dan told me to write a book, so I wrote a book. I won't even mention the book because I don't love the book, and then he said, hire yourself a publicist. So flew, at the time I built the firm out in Scottsdale, flew out to Manhattan, went on a book tour, and they didn't really get me much out there, but the PR guy said, hey, there's someone at Fox that dropped out. They need someone that can go on and talk about stocks. Can you do it? Of course I can. Show up, did a pretty good job. Producer called me after, kind of histories from there. Wound up doing some gigs with CNBC, Bloomberg. I still do CNBC for Asia, but I do Fox every Friday now.
And you got your lovely with you.
There she is.
We should interview her next. She looks like she's on the show 100. The 100. So, do you think people that are sitting out there with like $5,000 have a shot? Like, what should they do with 5 G's?
Yeah, I mean, it all depends. I mean, first of all, it comes down to your own personal financial situation. If that's your last 5 G's and, you're in a situation like this and you don't know if you're going to get your next 5 G's the month after, you probably can't do much for except put it in a savings account, unfortunately. But if you find yourself, you have a job, you've got some steady cash flow coming in, even if you got $500, you got to start somewhere. Everyone will tell you buy an S&P 500 fund. I'm not a big S&P 500 fund proponent. A lot of people out there, I think, you talk to a lot of smart entrepreneurs, a lot of smart people. Look at some of the things you're buying, right? Look at some of these stocks that are rallying like Zoom. Peloton's up 300-400% in the last year. Look at some of the stuff you're buying. If you have a 3, 4, or 5 year time horizon, I don't think you need to buy an S&P 500 fund. That thing's done 5% over the last 20 years. Invest in stuff you like, that's got a clear growth path. You'll do a lot better off doing that.
Isn't it pretty much just guessing though?
I don't think so, right? I think look at Amazon. I've owned Amazon personally for about 15, 16 years. I think the writings have been on the wall for a long time that they're going to be laying companies to waste, and that's a company that the stock market, Wall Street in general, is given a pass to because they knew how large of a value proposition that Bezos has. He was able to execute time and time again. And that's another thing. If you put, $10,000 into Amazon 10 years ago, something like $5-10 million today. So
Really?
Yeah. It's done reasonably well, you could say, investing in Amazon. So find some of those things you like.
What do you think the new Amazon is?
Well, you know what? We've been talking about this a lot on Fox. So what we've seen going on for a long time is this digitization of our economy that's really been expedited by COVID, right? Everyone's been stuck at home. And if you look at where the big corporations are doing with their money right now, Zoomcasts, all those types of things that are allowing people to work remotely, facilitating that. So now all of a sudden everyone's going out of that enterprise network into their house. They need security. Companies like CrowdStrike that are offering that endpoint security. Those are two names, Zoom, CrowdStrike. I think those are names of the future. Of course, not a recommendation to go out and buy anyone, but those are the things you have to think of, because when we talk about, everyone's talking about travel and leisure coming back. I think this is a structural change to our society. I deal with private companies, public companies all the time. You know what, Brad? They're seeing that their balance sheet is improving without sending people on these junkets out, unfortunately, to Vegas to travel. Travel budgets are minimizing, and their profit margins are increasing. So they're seeing now, like, hey, we don't need to travel. We don't need to spend hundreds of millions of dollars on conferences. We're a lot more impactful with things like Zoom. When you look at big office space, that's vacant, high vacancy rates around the globe. I think that's here to stay. So that's something when you look at commercial real estate that we're a bit worried about, but focus on where the economy is going. And that's kind of that work from home, remote workforce, anything playing into that. I think you got a 10-year runway where you could profit from that.
What about if I told you I could get you 1% a day on your money?
If you give me 1% a day, I'd say there's some serious risk behind that.
What if I explained it and there was no risk?
Explain it to me.
Well, this is supposedly.
Yeah.
Buddy of mine owns a gold refinery.
Okay.
He buys gold 2% behind spot. He says he goes and buys the gold, melts it down, sells it for spot. So he buys 2% back. He said if he makes it sound almost if it's a privilege. He'll let me in on this deal, and if I give him $100,000, he'll give me 1% a day. Every day. He only works 5 days a week, though, so it's only 20 days a month. It's 20% a month. But what he does is he takes the money, he goes out and buys gold from pawn shops and people that bought it cheaper than spot, obviously, and he buys it for 2% behind spot, melts it down, boom, trades it for spot, period. End of conversation. He says he'll give me 1% because he's keeping 1%, but he makes 2% every single day on all the money he puts out. Now, I did say, dude, if that's true, I know some people with some big money. I'll get you $100 million. He said there's not that much gold that he can buy, so it is limited. Yeah. However, there's no risk. It's like if the gold drops, I said, what happens if the gold drops? Then what? He says, well, then I get it 2% behind spot.
But he already bought it, right?
Well, no, he buys it, melts it down, and sells it.
Yeah, but from the time he buys it to melting it down and liquidating it, prices move daily.
Yeah, but it happens daily.
He does this all in a 24-hour period.
Yep.
Buys it, melts it down, and liquidates it.
Yep.
What happens?
That's what he claims.
Well, the counterparty.
You want me to call him? We should interview him.
Give him a call.
Let's just see what he says.
Yeah.
I better not say what his name is on air, but let's see if he'll answer, and let's see if you can get the bullshit out of him.
Let's see.
Because, dude, I mean, it's like it's sometimes who you know.
Yeah.
I mean, I know. I told you about that one deal. These guys are making a fortune. There's nothing. There's nothing fake about it. But they're not, openly letting investors come in. So let's see now. This 1% a day. Now let's see. He always seems to have the right answers. Let's see what he says.
What's up, Mr. Lee?
What's going down there, my man?
How was Hocus Pocus?
Hey, I got a question. That was fine. It was fine. Hey, I got a question for you.
Sure.
The 1% a day deal. What happens? I give you, let's say, $100,000. You give me 1% a day. Now, in my mind, it's okay. So you go buy gold 2% back, you melt it down and sell it and make 2%. Yeah.
Yeah.
What if you bought it, and on the way back from the pawn shop or wherever you bought it from, the gold drops?
You lock it in. Like when you bought your coins, I locked it in at 18.99, and then it moved to 19.12. It doesn't matter in the gold business. When you're a refiner, you can lock your price, and when you buy or sell.
Well, I got my buddy Rob here. He wants to ask you some questions.
Sure. Tell Rob that if the phone hangs up, my charger's not working in my truck. I'm gonna have to call you back.
All right, go ahead.
Who's the counterparty to this that buys it?
Okay, hang on, Rob. I'm gonna turn the fan down. Go ahead again, please.
Who's the counterparty? Who's buying it?
I buy it all. I have contracts with pawn shops. I have we buy gold stores that call me. Why I get better deals than other people is I pay cash only, and it's very difficult to get cash in banks right now. But I have my connections, so you can't even buy the coins I brought Brad yesterday. You can't buy any of that check, credit card, cashier's check even. It all has to be cash.
And so, but who are you liquidating it to? Who's buying it from you?
The mint.
The mint. And they're buying it from you at spot price?
U.S. Well, they buy. My number one buyer is Collodi Metals out of Miami. Okay, they're the biggest refinery in the world. Their biggest place in Dubai, and they pay me 99.5, where they pay other people 98. So
99% and a half a spot.
99.5 a spot. Whatever I lock it in, they pay me 99.5.
What type of volume are they buying?
Well, I'm doing about 600,000 to 800,000 a day.
600,000 to 800,000 a day.
So if they lock it in that they'll buy it at a certain price and gold drops, they just take the beating?
Yeah, because 9 out of 10 times when you lock in the price, they know what they're doing. Okay, and they're the house, so they at the end of the year they always win.
So if me and
all those days when people were selling their gold at 1,600 and overnight it went to 1,690, that's going to cover 90 mistakes they have over the year.
Got it. Now, if me and Rob wanted to throw a mil each in the deal, is there enough gold to do a mil each?
Not right off the bat. You'd have to slow into it. Like I told you before, we start out small. I tell other people. I turn down a lot of business because logistics. But as long as I could tell a new city I have cash, I do whatever, then I can make it work. I would say if you went with 100, I could probably get you to 545 days, 1,090 days, 1.5 million. And then 2 million, it'd probably take me 6 to 8 months. But I'm not going to tell you, I'm not going to be accountable for 2 million and pay it out of my pocket. I'd be stupid.
So, all right. Well, I'm trying to figure out the catch because Rob Loon is a known expert in all kinds of different things. I said, Rob, see if you can figure out the flaw in this plan. Because man, if you can get 1% a day, why wouldn't we be all over it?
Well, listen. We've been talking about this since 2016.
Hey, what? So what are you telling me? Shit or get off the pot?
No, listen, what I tell you, I said you don't do it. So there's no pressure, Brad.
Hey,
I've never asked you to come and do a deal. I never, if you want to do it, great. If you don't, that's okay too. That's it.
Hey, what happens if we do it and we grow, and you say you can get the money back anytime you want it? Like it's literally almost like liquid cash because I could say, hey, I need my money back.
Brad, every Friday you get your profit. Worst case Monday morning if the wire comes in late for the mint. So every week when you make your money, you don't keep rolling it. It's not a Ponzi scheme. It's legit business. And if you say I need my money back, then you have to give me probably 10 days notice so I can move other money in to cover the thing. But say you have $100 grand in, and you're making a point a day, okay, and it's $5 grand on Monday the following week. Worst case, probably Friday. $5 grand. Next week, $5 grand. Next week, $5 grand. And that's it. So you go 20 weeks. Don't go up $1 if you don't want to. Now you got your 100 grand back. Now you're up 100 grand. Now do what you got to do. Yeah, unless you want to roll it over to buy more, take the money out, test how it.
Oh, lost his signal.
There it is. There.
What do you think the flaw is?
Well, I didn't like the fact that you could take your profits out, and it's not a Ponzi scheme, but give me 10 days and I'll bring new money in to pay you out. There, that sounds a bit Ponzi-ish to me.
Yeah.
That it's not you're getting your money, you're getting your profits back. You're getting your 10 grand on your 100 grand. If you need your other 100 grand back, give me 10 days and I'll get Brad's money to give you your money back, Rob. I don't know. There's obviously a lot more I need to get into it to fully understand it. Dollar volume wise, it doesn't sound like there's a big enough, opportunity here. To
At a percent a day?
Yeah. I mean,
what do you mean? He said he can get you $2 million up. $2 million at 20% a month is $400,000 a month.
well, I mean, he's saying that's the total market is 2 million, but isn't anyone else putting any money into this?
No, he said he could get you up to that. According to him, oh yeah, there's all of his buddies.
All of them.
Yeah, he doesn't ask for money. That's why I said he doesn't really care, but he'll let me in. You heard. He's been talking to me since 2016. The only reason I haven't really done anything is because it's like, number one, when it's too good to be true, I always have been taught to believe it usually is.
You're right.
So it's like, I don't want to give someone money and then find out, oh, you're the dipshit that did it.
I don't know, man.
You wouldn't do it.
I wouldn't do it.
You wouldn't do it.
Not at all.
Okay, so what would you do? What would Rob Luna invest in right now if someone had an, $100K to throw around?
100K. I mean, I think, one of the things we're putting our money in right now, quite honestly, is private companies. When you look at, a lot of, I'm looking at for example, an auto body shop. These are guys that just got a contract from Allstate, good hands people. They are, basically swamped. The challenge with this guy is Allstate will only send him a certain amount of cars based off of square footage. He's in Los Angeles, so square footage in Los Angeles is incredibly expensive. I went down to his shop. I like to validate and verify things. He was taking up the alley with automobiles. He has neighbors complaining on him. All he needs to do is extend, open another shop. The guy doesn't have the money to do that. I've talked to Allstate and said, yeah, we've got a backlog that we like to send him. The guy has all these certifications. 25 to 30% cash-on-cash return. Very, very difficult to get that in public markets. Those are the things when I can go out there, see what's going on, feel it, look at audited financials, balance sheets, and also working with entrepreneurs. When I look at what he's doing, I feel that I could add some value to that situation to maybe get that margin to 35, 40. Those are the types of deals that I like to get in, Brad. One of the things we're saying blanket today, real estate, gold, commodities, the stock market, there is no deals out there. On any historical metric, everything is fairly valued to expensive or really expensive. So you need to find those deals where you do have that competitive edge, where you can add some value, bring some value to the deal. So if it's real estate, you're finding those off-market deals that maybe haven't hit the market. If it's, companies, it's really those private deals you can get in and kind of lever them up. The private markets are really where you want to be today. So as a asset class, look at private equity, companies like Blackstone, KKR that are out there raising funds that are now coming to individual investors at smaller amounts, 50,000, 100,000, because the pension fund clients are going away. These types of private market deals are becoming more available to the average investor than ever before.
What about silver?
Well, they say silver is the poor man's gold, right? And so, usually there's a high correlation between a move up in gold and a move up in silver. I personally have never invested in gold other than what I wear on my wrists and around my neck for a couple of reasons. Number one, when you try to value gold, I ask any of these gold guys, well, how do you actually value it? There's no valuation metrics to be able to understand what it should be worth. When I buy a company, I can look and say, okay, here's your earnings. Historically, we're going to pay 5 to 7 times earnings. That's what the market trades at. On gold, there's really no way to tell that. The other issue about gold is there's no dividends that are paid out of gold. So if you put those gold coins in your drawer, that's nice. But the only way you're going to make money is if those gold coins go higher at some point, and you're able to sell them to somebody else. We're off the gold standard. If we still on the gold standard in the U.S. where the dollar was actually tied to something tangible like gold, then I'd be all in on gold. But ever since we got away from that, it's been very, very hard to value gold. So I'm not a big metals investor just because I can't get cash flow from metal.
What is cash flow the key?
Cash flow is king, right? For example, I sold my business for several millions of dollars this year. The challenge is, and I didn't sell all of it, I sold 70%. I wanted to keep 30% in the deal. The reason being is every $1 million that they gave me, my cash flow, my return on equity of the $1 million that I kept in my business was about 25%. So I'm not retiring them anytime soon. I'm in my 40s. I'm going to be working for another 20 years. Once I took that money out of the business, I needed to put it somewhere where I can get an equivalent rate of return. Our savings account's paying nothing, so every day I have it in there, I'm losing money. The stock market, look, you're going to get 8, 9%. It's not going to be 20%. So that's why I'm out talking to guys at the body shop and some of these private deals where I could see higher rates of return. I could put some sweat equity in the form of getting in there and helping them improve their business to get that 25, 30% back. But it's not easy. So the average guy that's selling a business, selling a piece of real estate today, bringing in $1 million, you might want to think twice about that, because if you had 7, 8, 9% cash flow coming from your rentals, if you're selling a business where you're cash flowing 15 to 20%, it sounds nice to get that lump sum of money. But like I work with professional athletes, right? They get this big check, $20, $30 million, might be 80% of their lifetime net earnings. So they see this big dollar there, but it's the cash flow that generates. So when I tell them, okay, on $20 million, first of all, cut that in half, because half goes to taxes. Now you got $10 million, right? And so if you got $10 million that you're getting 4 to 5% on, that's $400,000 to $500,000. So that $20 million check that you got is really a $400,000 lifestyle. But yet they bought the $10 million house and the cars and all those things. So cash flow is king. You don't get a lump sum and spend it all in one day. That's got to last you. It's the money that comes out of that. That's what is able to support your lifestyle. So cash flow is everything.
So you think 4 or 5% is average?
45% distribution is average right now. You put it's all perspective, right? So one thing as an investor, we teach people, you always look at the risk-free rate. Anything, real estate, private businesses, the stock market, the risk-free rate, what you're going to get over the next 10 years is the 10-year government treasury bond, right? Today that pays 0.75%. You're not getting anything. So if I'm going to invest, well, I got to look at that, because I know the government for the next 10 years is going to pay me something. Today it's 0.75%. Anything above that obviously is good. But I started in the market in 1998, and we remember the big crash in 2000. In 1998, that risk-free rate, the government bonds were paying 7%. So it's a huge hurdle, right? It's like, okay, no risk and I get 7. That sounds pretty good. Why would you stick in the stock market that's yielding 1% at that time, that's trading at nosebleed valuations? Today, everyone's, why isn't the stock market going down? Well, the 10 years at 0.75%. The S&P yields 2%. So even if the market does nothing for the next decade, you get 2 times the cash flow at a more favorable tax rate than you do in treasuries. That's why the stock market's not going down. It proves the point. It's all about cash flow. Pension funds, endowment funds, the big money that moves the market, they need the cash flow to pay those retirees, to pay the next building that they're going to build for the Harvard endowment. It's the cash flow. It's not the principal that they live off of.
What about like a, let's say, multifamily house or multifamily apartment building that pays 15% a year?
If you could find a multifamily house today that's yielding 15%, that's a great deal. I mean, we're not really seeing them. It's more 6 to 7%, which is part of an overall portfolio. Makes sense. Goes back to that 4 or 5% that I'm talking about. So once you start diversifying that, that's kind of where you're at. Multifamily, great asset class in terms of commercial real estate. That's actually considered commercial real estate. It's been the highest risk-adjusted return, meaning you've had the lowest volatility versus something like industrial warehouse, Class A commercial office that we talked about. It's a nightmare. Hospitality, hotels. Multifamily makes a lot of sense as part of your overall strategy.
What about this building right here I'm in?
Yeah, this building, well, do you own the building?
Nope.
No? Yeah. So I wouldn't want to be part of it. I don't want anything.
That's why you asked me if I owned it first.
Yeah. I don't want to offend you. Yeah. Well, it is different though, right? Because
I was going to buy it last year for $21 million before COVID.
Yeah.
And
it's probably cheaper now.
Well, that's the thing. Like, coincidentally, my lease on this, I got the whole floor.
Okay.
And then downstairs, I got a quarter of the floor, and my lease is up January 1. And 70 employees went home on COVID. Only 15 came back. The rest of them, I don't care if they're home. It's actually better for me. They're more productive. They don't drink my Red Bulls and shit. So it's like, I'm thinking about, I don't even need this floor anymore. So why don't I just give up like half the floor? And then I started to think, dude, what if I'd have owned this building? Like, I'd be screwed.
You're validating the long-term thesis that I'm talking about in terms of investing, right? I mean, people don't need that much space anymore. You're just seeing larger and larger vacancies. You have companies like Facebook and Google saying a large part of our work staff is going to be work from home forever. I mean, they're making this claim now, so that concerns me. And really, it wasn't about offending you, because you don't offend very easily. It was really more about, if you own this, right? Well, you'd have to rent somewhere else anyway, right? So that's a different dynamic versus you just being a passive investor and buying this and renting it out, because it's just like when you buy your own primary residence. That's always a more favorable investment than buying that second primary residence and renting it out, because you have to put that money for rent somewhere anyway. That being said, $21 million, I'd have to do the numbers. There's a huge amount of risk, because, especially, I mean, look at, and then you got to figure real estate. We talk about it now like it's this commodity. Well, real estate is very local. When you look at the local economy in Vegas, I rode over here at the car driver. They laid off half the workforce there. There's no conventions that are coming back here. I'm staying at the Wynn right now for like $1,000 a night for a $5,000 a night room. How long is that going to last? 2, 3, 4, or 5 years? Now,
You think?
I don't know. Do you?
No, but I don't think that long. I think
didn't
till
think it'd
November.
last this long.
I think till November 4th for sure.
Do you think we'd be going through this shit this far into this year? I didn't.
When this first happened, I thought it was going to be worse, because I had buddies that work for the armored car. They said that they were taking money out of the casino's vaults, and I thought, dude, this is serious. They're looking for, like, I bet you they assume there's going to be like death and famine everywhere.
Yeah.
So we went home, locked down for 30 days. After that, I knew it was political.
Oh, well, talk about political. We're a couple of weeks away from election now too, right? I mean, and you hear what's going on in terms of, I'm not afraid to lock down the schools again, lock down the businesses again. You look at companies, I live in California, what's going on over there with our governor. I mean, it's outrageous. He's asking Disneyland in California to wait until numbers get to where they've nowhere even near all year long. So basically saying indefinitely you'll be shut down. They just had to lay off 28,000 people there. You talk about politics, look at what's going on in Florida. They reopened Disney World a few months ago, not one single issue. How is that not something that's looked at and addressed when you're making policy? It's all politics, right? And so that's the challenge. I don't know. If you tell me what the political environment's going to look like in 6 months from now, 7 months from now, maybe I'd have a better idea. But right now, I don't know. Maybe it is a year, maybe it's 2 years.
Let's say Trump wins. How's it going to look in 6 months?
Well, I think from that standpoint, in terms of back to business as usual, it happens a lot quicker. And that's not necessarily making a political statement. It's just more about policy. It's just the policy that's been articulated from both sides. The regulatory environment, right? All those things that we've seen under Trump that have been more business friendly.
What if you were on Fox News and they asked you who you voting for? Can you say it?
Yeah, I don't talk about that, but I think, at the end of the day, the way we invest our money, I'm very outspoken about policy. I'm telling you right now, I think Trump, hands down, like him or not, is much more favorable for business owners, much more favorable for business. I mean, that's just policy. I mean, Brad, if you make $100 and 35 of that goes to the government versus 21, what's better?
21.
Yeah, of course. It's just simple economics. So that's not making a political statement. It's just talking about policy.
Especially when the government wastes their money.
Well, that's exactly it.
They act like you pay more and everybody gets more help. That's not true.
No, that's not it. And they also believe that the more that you pay in taxes, that creates programs that are going to incentivize people to go out to work. I work with entrepreneurs that have real businesses. For a lot of them in the lower demographics of pay, those people left because they were getting paid more to sit home, $600 a week on their couch than work. So we incentivize them not to work, to stay home. Like, that's what you got to think of, right? And to me, that type of policy is appalling. Like I told you from the beginning, I grew up extremely poor, right? It wasn't the government that saved me. It was capitalism that saved me. It was education that saved me. It was the ability to go out and build a business that allow me to be in the position that I'm in today. So when I hear these things, I think it's absolutely appalling.
You guys hear my sound effect? So you said you grew up poor?
Yeah, I grew up extremely poor.
You-
Yeah, my dad left when I was real young. My mom, it was a story a lot of people know, got hooked on drugs, wasn't
You
even
did?
paid attention. What's that?
What kind of drugs? Or your mom got hooked on drugs?
My
Oh,
mom, yeah.
What
no,
kind of drugs?
Fortunately, I didn't. Cocaine, primarily.
That's it.
Who knows what else? I was 9, 10 years old. I didn't know other than she wasn't home sometimes, 2, 3 days at a time. We'd go in the refrigerator and, she wasn't even functional enough to apply for government benefits. There wasn't even any money there. Right. And so, when I hear all these stories about, oh, you got to support this and support that and create this program. Yeah, I'm all for government programs as a bridge to getting people out on their own and doing things. I'm not for government programs that incentivize people to stay home, to work less, that are going to create greater government fraud that we already have.
Yeah, but when it sounds like, he's went to Wharton, he's you sound like you came from a upper class family that put you through college. How'd you get to Wharton?
I didn't. I basically got a scholarship when I was younger. I started out at a junior college. I was wrestling. Then I went to Arizona State. It was my first exposure to university. That was just because an opportunity opened up for me. And it was later on in life when I got into finance. When I was 20 years old, I never even heard of Wharton, to be honest with you.
Do you think if you didn't learn what you learned about money, you'd be in the position you're in now?
No. What it is, it's just, that's the path. In terms of an entrepreneur, I'm not one of these guys. I'm just not brilliant enough to create something from scratch. I'm not going to create the next Uber. I'm not going to create the next Tesla. I'm just not that guy. So what I needed to do was find an industry that already worked. It happened to be finance. And then my whole goal was just to become the smartest guy in that industry. And that's what I strive to be every day. And that's what allowed me to basically build a position on that. But being in that industry in finance, it is more of a traditional level of education that I had to go out and invest in myself to do that, because I wasn't smart enough like some of these guys to create YouTube and sell it to Google, unfortunately.
Well, and also it always doesn't have to be Uber and YouTube and Google. Like, dude, Lightspeed does pretty well.
Yeah, Lightspeed does well. Look, I'm talking to this guy, right? He's first generation in this country from Mexico. He started a body shop. The guy's making great money.
That's what I mean.
Didn't even graduate from high school, right? So there's a ton of opportunity out there for entrepreneurs. And that's the whole idea, right? When you talk about society today, it's a challenge, right? Because General Motors paying you a pension. I had some, friends that, went and worked for Boeing right out of school. They're lucky enough to make that pension cut off. Those days are gone, though. There's nobody offering pensions anymore. Companies, as we saw, are already downsizing. They're outsourcing things. So the ability to be able to create something of yourself, to be an entrepreneur, where there is an auto body shop or where there is creating the next Lightspeed, that's what you have to focus on today. You need to be good at something, and you need to add value to people's lives through that additional education, value, expertise that you have, because there's no backdrops anymore.
Yeah, but you're an entrepreneur, even though you just said you weren't one.
Yeah.
You started a business by helping people understand money.
Yeah. I am. But in terms of an entrepreneur, I took a pre-existing industry. I think I revolutionized it in a certain sense. I created a very strong value proposition. I worked, initially with ultra high net worth investors. And the reason being is they didn't want to go to call centers. They didn't want model portfolios. These are guys that are investing $5 million and above. They wanted very, very tailored service. They wanted to be able to call your cell phone on a Sunday night. Yeah, there's a reason, Brad, that I'm divorced, right? To be able to succeed and to be able to service those level of clients at the level I did, it took a little bit out of my life, but that's just the way things go sometimes. But it allowed me to be successful. It allowed me to sell the business, and my ex-wife bought a house for cash out in Scottsdale. My daughter goes to a private school. I live in a pretty good place myself. That's just the way the world works.
That's usually how the sacrifice.
That's it.
Yeah.
Yeah. There's no not sacrificing. A lot of people see the exit strategy, right? They saw when I exited this year in January, and it was in the news, and that's great. This guy's crushing it. I have people calling up that want money from me. They didn't see when I left the hedge fund to start my firm. The first year I made $24,000. On the weekend, my buddy and I made $100,000 the year before at 26, the business I was working at. My buddy had an auto detail business. On the weekends, I was cleaning cars. I was a financial advisor bringing in money, but I was cleaning cars on the weekend to make sure that I could pay my bills. Those are the sacrifices that people don't see, but those are the things, if you believe in what you're doing, you've got to put that in. You didn't start at the top.
No.
No.
I didn't fall there either.
Yeah, exactly.
You ever heard you don't fall to the top of the mountain?
Yeah, well, they say, well, it's only ditch diggers that start on top, right?
Yeah, that's pretty funny. So if I'm listening to this and I'm an entrepreneur, what tip would you give me?
Yeah, I mean, I think, first of all, you need to find out what is that one thing that you can do better than anyone else in the world that you firmly believe in, that can add value to somebody's life and make their life better. That's it at the end of the day. I mean, it's really that simple. It's simple, but it's not easy, right? You need to find that, but what does that mean? It means investing in yourself. You got to where you were. You created this big empire that you had. I was saying this is the most beautiful studio I've been in. I've been in Bloomberg's in Midtown Manhattan. I've been in Fox. I've been in CNBC. This is beautiful. You did it through sales. You're just the best damn salesperson in the world. But the great thing about that is I'm a salesperson. Everybody listening to this show is a salesperson. So the scalability, the size of that total addressable market is huge. But you believe you're the best, hands down. And you believe you can train, help, educate other people to be the best. So find that idea, but then at the end of the day, no one's going to sell it except for yourself. So if you can't sell that idea to somebody else, you're not going to do shit either. So that's why I think what you do, what you bring is extremely valuable for entrepreneurs.
Yeah, any entrepreneur that doesn't know how to sell should stop what you're doing and basically, pick up a book or take a course and learn the art of sales and persuasion, because you have to sell somebody on something no matter what.
You have to sell somebody on something. And I think, though, it also, Brad, you have to do is you have to invest in yourself. We're talking about I'm looking to start some programs to work with some of the investors, some of the young entrepreneurs that I never could have before. We had $5 million minimum, so there's a lot of people I wanted to help that I couldn't. But now that I've had this event in my life, I'm looking and working with you to kind of create some programs for those people. But I'm coming here now after 20 years in this business, after $500,000 at Wharton and UCLA Anderson and NUS, Arizona State, education, the time, dealing with some of the wealthiest investors in the world, helping people take their business from a $4 million to $100 million valuation and exit. I did all those things before I could sell myself on the fact that I was qualified to teach other people. That's just me. I believe you got to walk the walk. And I hear some of these people today on Instagram that haven't done shit. They're 20 years old. They could tell you how to scale a business. They could barely zip their pants up. So from that standpoint, I think you got to believe in yourself. And so I had to sell myself that I was the best out there. And it took me almost 20 years to get to that point.
Before you believed it?
Before I believed it.
And now you do.
Now I do. Hands down, I believe it. I know it because I see it. I see what I've done in my own life, coming from nothing. I see what I've done for other clients. And that's why I said the goal, I don't know. I got to see results. When I look at a company, I don't want to see their number. I want to see audited financials from third parties. I started out as a risk analyst. So first of all, like Warren Buffett says, worry about losing that dollar first before you make anything on that dollar. Because if you lose it, doesn't matter what rate of return they're guaranteeing you. And doing this for 22 years, let me tell you how many 1% daily deals that I've had come across my desk.
How many?
Hundreds.
And none of them work out.
None of them. None of them.
That's why I've never done it. Because
problem.
I know I'm smart enough to know that even though you want that 1% a day, they never work out.
Just don't work that way. It's like these guys who tell you, I'm in the market. Why do I still manage people's money? Because I don't have enough money of my own on that 4% to where, okay, I've already solved it all. I don't have $700-800 million in the bank. If I did, I don't know. I'd probably be just working with young entrepreneurs for free. But I don't. But if I knew how to time the market and I knew exactly what stock was going to triple in the next 3 weeks, I do have enough money where I'll just put it all into that and I'd probably be okay. But I don't know how to do that. So these people are writing the books on how to time the market, Forex trading, all this bullshit. If they knew how to do that, they would not be talking to you.
Yeah, now what's up with the Forex?
Yeah, that's just the latest and greatest thing to where it's all over Instagram. Go in and trade currencies, read a book. They're creating these multi-level marketing schemes out of it. Forex trading, because of the leverage that's involved with it, is hugely speculative. It's hugely risky. It's kind of like trading gold. There's no valuation way to value it. there's things that could go really, really long. I mean, you talk about currency, why I don't trade currency. In 1998, I don't know if you remember the Asian currency crisis, and there was a company called Long-Term Capital Management that almost went under it. The government had to backstop. This was formed, a hedge fund that was formed by, I want to say, 6 Nobel laureates. So when you win the Nobel Prize in economics and finance, you're a pretty smart guy. Well, they created this brilliant strategy of how they were going to trade currencies, but they didn't, in their modeling, anticipate, hey, currencies can go up and down. But what about when the Thai currency, the Thai baht, gets devalued to 0, right? They didn't have that on their roadmap. The thing blew up, wiped out investors. The government had to come in and backstop them because it was systemic risk because so many large institutions were invested with them. So if Nobel Prize laureates can't do what they're modeling, the guy on taking the 4-minute Instagram class, he's probably not going to get it too right either.
Yeah. What about crypto? What about Bitcoin?
Look. I mean, in terms of does cryptocurrency have a place in today's economy? I believe it does, because we talked a little bit earlier about the gold standard going away and us just printing money and it's just funny money and nothing's really backing that. Does it have that? Yes. But until we get somebody backing that I believe in, like the U.S. government, I'm not putting my money in it.
Well, the only reason I have Bitcoin is because I take it if someone wants to give it to me.
Yeah.
I've had a couple hundred Bitcoin given to me. 100 of them around $600 a coin, and obviously they're way above that now.
Yeah.
But I've never bought any for that exact reason because I don't know what backs it.
Yeah,
like, it doesn't make sense to me. I've learned late in life. I'm just starting to learn about money, and I'll tell you what. If I would have known what I know now, and I know nothing compared to you, but if I knew then what I know now, shit. I'd have at least 100 million cash.
That's always the case, Brad. Like I was just talking to someone the other day, a friend of mine, who started a new business, and he was congratulating, "Oh, you did this on your business, that on the business." I said, "You know what though? Same thing. If I would have known today, I started that business. I was 26 years old. That was in 2002. If I would have known then what I know today, had I just tweaked a few things, the way I built the business, scaled the business." My valuation would have been 3x. The thing about it is it wouldn't have cost me any more money. It would have actually been less time. I would have worked smarter instead of harder. But the challenge is when you build those legacy businesses, when you're so far into it, how do you go back then and just change everything on your consumers without losing half your customer base? It's tough. And so that's the importance of getting that solid foundation. And that's why I want to work with young entrepreneurs that are starting out to get that foundation right. Build that business to be a $100 million, $200, $300 million business. Don't build it to be a $2 or $3 million business, and then 5 years later you try to turn around and change it because it just doesn't work that way. Get that foundation right. And one thing I always talk about people, young entrepreneurs, is I ask them what their exit strategy is. What do you mean? What's my exit strategy? I'm trying to build the business. Well, if you're not thinking about an exit strategy, you're not doing yourself any service. Are you going to go public? Are you going to sell this to private equity? Are you going to sell it to a strategic? Because if I know that, then I could help you. If we're going to sell it to private equity and you're a dental company, and I could tell you, hey, look, here's what they're looking for. They're looking for a minimum of 6 shops. They're looking for EBIT multiples of 20 to 25%. And if you put in this system, this software, that's kind of what's getting the highest multiples, 7 to 8 valuation versus 4 to 5. So when we start building the business, we're building it based off of the exit. Now, you might not ever sell. You might have, like today, I'm saying such great cash flow, 30, 40%, you might not want to sell. But Brad, I know your business is your most valuable asset. I can tell you, I made a lot of money in private equity. I made a lot of money in stocks. I made a little bit of money in real estate. Nothing compares to the money. I started my business, like I told you, out of my kitchen table, 0. I was washing cars just to support the business. I didn't put any investment into it. So then to sell it for several millions of dollars, 70% of it years later, there's nothing that compares to that. So that for entrepreneurs, that more than likely is going to be your biggest asset. My largest client today, my largest personal client, has invested with me about $100 million with me that he gave me a check for, which means he exited his business for about $175. You got to pay taxes and everything. 2-3 years before he liquidated, he maybe had $200,000 liquid. So so from that standpoint, that was his whole asset. So if you're not treating that like your most valuable asset, you're doing yourself a disservice. And at some point in time, you're going to want to take some money off the table, whether it's a full or partial liquidity event, and you need to be preparing that from day one.
What about taxes? Is that a place to focus in on?
Yeah, I mean, obviously you want to minimize taxes as much as possible, right?
Who would they call?
Legally, you want to get a good CPA. We do that at our firm. We work with entrepreneurs. We've got some really good CPAs. We've got guys that come out of Ernst & Young that used to charge 3x what they're charging at our firm now, so we can help them with that. But there's a lot of good CPAs out there. Get ones that are working with business that have had successful exits, though. Right? That's always the thing, right? Is like in my industry of wealth management, we all charge 1%. Like I said, I've worked with some really serious people and have done some things outside of just picking good stocks to help them improve their life financially. I've gone to Wharton, I've gone to UC, I've invested, I'm charging 1%, but so is the guy down the street with the GED. God's honest truth. There's no minimum requirement to call yourself a financial advisor. So you got to ask those tough questions, and that's becoming an educated consumer of financial services, though. Also, it's all about education. Right, so you got to ask those questions if you're looking for someone like that. Well, what other entrepreneurs have you worked for? Can I call some of these people that you've helped that have maybe had liquidity events? I would do that.
Is there a way to like avoid most of the taxes when going when exiting?
Well, I'll tell you this. Let me think how I could put this. Well, one of the things that you could really minimize is your state taxes. Right, so if you live in California, you don't want to pay 15-16% to the state. That's one thing. Unfortunately, my liquidity event was one where I wasn't really prepared for. I wasn't ready to sell, and the offer that came to me was just too good not to do it. So I did it. But in hindsight, I would have moved out of the state of California into a more tax-friendly state like Nevada, Florida, Texas.
Well, Newsom's going to put a stop to that anyway, isn't he?
Well, Newsom's going to put a stop to any business working in California.
He's trying to where if you move now, up to 10 years later.
Up to 10 years, yeah. No, they're trying to put that, right? And so now you got to prepare for your exit a decade before, not going to happen. Whether or not that gets passed, I don't know. But
who's passing these things? Cohorts?
People that are getting $600 a week to sit on their couch that just take it from other people.
Makes
right?
no sense.
Their constituents, right? And that's the challenge, is like, who's voting for this policy, right? And so, yeah, and I'm one of those people, Brett, I think I just never really, even when I didn't have any money, I just always looked at the nice cars, the nice restaurants, and I just said, well, shit, I want to do that. I'm going to find a way to do that. I never looked at those people and said, well, shit, take from them and give to me because I don't have enough. Because that just doesn't work. Right, but people still believe that that's the way to do it. So you got these people that are getting their $600 a month sitting on the couch. So for them, $175,000 pretty much is what this new SALT limitation is, where you pretty much get capped out, so you can't even write off any of your property taxes or anything like that in California now. But when these people hear $175,000, in their mind, that's so far away. And especially when you talk about the millionaire's tax now in California, them to make $1 million in a year is like, us making $1 billion a year. So, hey, yeah, tax all those people. That's who's voting for this stuff.
And it's costing.
It's costing a lot.
It's going to cost California dearly. When are you guys moving?
I know. It's it's
you have to.
It's ugly. It's happening in New York too.
Well, why aren't you moving? There's other places besides California.
I already paid a big tax bill. Paying millions in taxes this year, so it's kind of like coming out with the fire hose when your house has been burnt down to the ground.
Too late.
Too late for me personally.
Well, why?
Now I might as well sit around and enjoy the nice weather and waves because I paid a lot of money for it.
Yeah, but aren't you gonna double, quadruple, triple what you've done already?
Well, I'm hoping to do a lot more.
Well, then you better get out.
We're looking at some things. We're looking at Idaho and
Montana. Idaho's beautiful.
Yeah,
Montana.
We were just in Wyoming.
Not permanently though.
7 months out of the year.
Yeah, whenever it's sunny.
Yeah, exactly.
I don't like ice tundras. Hey, so before we go, I want to talk about evaluating a business.
Yeah.
If I'm out there, I'm building a business, regardless of what kind it is, I've got it up to, let's say, it's making $500,000 a year, and I'm taking home out of $500,000, let's say, 100.
Yeah.
20%.
Yeah.
What kind of evaluation is that bringing?
Yeah, so you're talking about your 20% margins, they would call that. So your top line. Let me ask you another question, because I see a lot of people get confused with this, that I've been dealing with a lot of newer entrepreneurs lately. So you're making that $500,000.
That's top line.
Top line. You're bringing home 100, but is that after your salary, or is that what your salary is?
That's after all expenses. The business nets 100.
Okay, because that's an important factor, though, especially for smaller businesses. Let's say revenue under $1 million or revenue under $2 million, because a lot of them that I look at. I'm looking at some different auto body shops right now. They say, okay, we did $1 million, but then we basically, and I made 250. Okay, look, let me pull the tax returns. Well, why are you showing $50,000 in profits on your tax return? Oh, well, 200 went to me. Well, you didn't make 250. 200 went to you. 50 is your bottom line. That's the way anyone's going to look at it, because when you're buying a business, you're not thinking, oh, I'm going to put on, I don't know how to fix cars. So I'm not going to be able to go in there and run the business. If you're coming out, I need to replace you with somebody. So that 200,000 needs to go to somebody else. Or if it's not 200, tell me what it is. Is it 150? Okay, it's 150. Then 50, that comes back. And now I've got 100. That's just an important component to remember, because these people that are stripping all the money out of their businesses and not looking at it that way, someone who comes in and buys you is going to have to replace you. And so the value that's left after that salary, what there's going to be a multiple of. But so let's say it's 100. Now that 100,000, it's going to have some multiple. Let's call it anywhere from 2 to 30, 40, 50 times earnings. It's very industry specific. So if you are, let's call it a auto body shop, maybe it's 3 to 4 times earnings, very stable, predictable. You know what's going to happen.
Earnings meaning net?
Net earnings, yeah. But if you're maybe Lightspeed, a fast-growing technology company, you're doubling, tripling revenues, well, you have to really, really forward forecast, and it might be 15, 20 times earnings. So it could be significantly higher. So your top-line growth is the most important thing. So what I could say for young entrepreneurs as you're preparing, first of all, focus on that net. If you're getting ready to sell, and I would do this maybe 3 to 4 years before liquidation, because of the fact that that's really how far acquirers are going to go back to start pulling your numbers. I just sold to a publicly traded company, so there's no greater enema that you're going to get or microscope up your ass than from a publicly traded company. They look at everything. So I can tell you this from experience, what to do, not to do, really that 3 to 4 years. Now, when you're 5, 7, 8, 10 years prior, you're just trying to maximize cash flow. So you're taking every dollar out of the business. But when you seriously start thinking about now someone coming in to buy your business, you want to look at what's left after paying you, number one. Number two, you don't want to have a lot of debt, obviously, on your balance sheet, because they're going to pull that. But number three, you want to be showing top-line momentum growth. So you want to show 18, 19, 20, year over year over year, 15, 20, 30, 40% growth. If you wait until you're in decline to sell, you say, oh, shit, Lightspeed is kind of tanking. The people that are going to buy your business are going to realize that too. If they're going to see, okay, 18 you did 2 million, then 19 you did 1.5, this year you're trending 1.2. Well, guess what? They're going to think next year you're going to do 700 or 800. To where my company, when I sold, we were hitting our highest numbers ever.
That's the time to sell.
At the time to sell, right?
What about, let's say I take, for example, $250,000 payday versus, I'm going to take $50,000 salary and $200,000 in dividends.
Yeah, so I mean, they're still going to look at kind of what went into your pocket, but that's more of a tax strategy, right?
What are they buying? Are they buying earnings?
They're buying earnings.
Yeah,
well,
so
what they're
there's
buying
ad
is,
backs, aren't there?
There's ad backs, yeah. So a smaller business, a few things are going to happen. The ad back's going to be number one. Let's just say you've got $200,000 in net earnings, but then let's say they're going to say, well, what does it cost to replace you? $100,000. So that leaves you with $100,000. But then you get ad backs like I got. Then they're going to go back and say, okay, but you had your corporate car coming out of here. There was some travel. There was some meals and entertainment. They know.
Yeah, but
that gets put back, right? So that'll be an ad back. So your 100 might then get up to 150, 200. But therein comes the issue also of a good CPA and having a good, every year you want a good balance sheet and you want a good P&L statement, because those are the things that and obviously you want to file your tax returns, but those are the things they're going to look at. And if you've had consistency in that P&L, where your meals and entertainment, your car, your cell phone, maybe you're paying for your Sirius XM radio, all of those things, as long as it's consistent, then you can go back and say, look, that's mine, guys. When I leave, that comes out, and you could show that. They'll add that back. So that 100 in earnings might go back up to 200 with that. But you got to have good record keeping for that, to be able to kind of articulate that point.
Yeah, because if I wanted to sell this place in the next 3 to 4, and I said, like, again, I don't need this whole building.
Right.
You know,
exactly.
I don't need Red Bull.
Downsizing, right?
Yeah, and I don't need Red Bull in the green room.
Nope.
You know, the water works just fine. I just get you a pitcher of water.
That's it.
But when I get serious like that, I'm starting to think, like, do I need all this shit? No. And if I know I'm going to sell in 4 to 5 years, are you supposed to now just operate lean?
Brad, I mean, the first thing I do with entrepreneurs, I pull their balance sheet, I pull their B&L, I pull their tax return, then I go and I spend time at their business. Do we need this floor that we're spending $3-4 grand a month for? Probably not. Okay, that's $44,000 a year. If we put a 10 multiple on 5 multiple on that, it's 220 grand more that you're going to get by doing that.
Yeah.
And that's the thing. Everything, the water, all these other things, all that stuff, you think it's small, but it adds up. And when you start putting a 5-10 multiple on that, and I could show people, hey, if you just get rid of this, that's $1 million more you're going to get at sale. It's gone.
Yeah.
You know.
What about if someone said, I want to see last 5 years, and you say, no, you can see last 3?
You could say that. They might walk away.
Is that a danger?
It's a danger.
What's normal?
I mean, usually they're going to ask for 3 to 4, but they could ask for 5. But usually that's not. I mean, there's not a lot of validity in that. I mean, sometimes they will. 3 to 4.
How do you get blue sky? Like Lightspeed, for example, if someone tried to buy me today, I'm going to tell them what's about to happen and the shit that's going down. And oh my God, you don't understand what's about to go down. I want money for that. How do you get that prior to actually achieving that? Is that even possible?
How do you get paid for that?
Yeah. The potential.
Well, I could tell you, when I saw, and I can't say specifics because I have an NDA signed, but I could tell you I've got what I would think was a very, very reasonable multiple based off of a narrative that I told of growth. But that narrative was also backed by my P&L and balance sheet over the 2 to 3 years. So that's another thing when I work with young entrepreneurs is what's our narrative at sale? And let's start that paperwork. It's sales, Brad. When you're selling your business, you know all about sales. You're selling them on something. And I see this time and time again where people have a shitty narrative where if you just would have had a better story, you might have had another $1 million or $2 million, and there's the power of sales.
Yeah.
So you build that narrative, and then you work on that business over the next 2 to 3 years to validate that narrative.
Boom. There's a bomb. Folks, by the way, if you guys aren't following Rob, go follow him. I noticed that you must have just got your Instagram account.
3 months ago, my man Albert Preciado got me onto Instagram. But you know, I love it, man, because I'm dealing with real people. It's instantaneous feedback where people are asking you questions, feedback. I've been doing national media for 10 years. You don't get that. You don't get that feedback. I'm really having fun with it.
Well, I want the Bomb Squad listening to this to go follow him on Instagram at least, just so he goes from whatever you're at now to just
2,000 maybe.
Yeah, let's bombard him and let's get him up to a decent number. Plus, you're dropping tips on there now.
Yeah, every Friday I come in and I talk about the market, some of the things we're doing. I talk about things that I'm buying, that I'm selling. I'm going to be doing one on YouTube for entrepreneurs pretty soon. So I'm giving out a lot of information. My largest client pays me about $300,000 a year, every year, right? So I'm giving the same information that I give to my minimum client pays me $50,000 at the wealth firm I'm with right now. I'm giving out the same information for free on YouTube.
What if they listen to that and they stop?
Well. That's the other lever that I don't pull on Instagram.
They got relationship.
Plus,
you got courses coming out with interactive training courses that'll literally teach people step by step exactly how to either handle their personal finances and or build businesses from scratch.
Both, because I think you have to do both these days, right? If you're an entrepreneur and you don't know how to manage your own money, it doesn't make sense. And that's another thing. When I went to sell my business, I already knew my own personal financial roadmap. I had it built. So I knew for every dollar that I was bringing in what that meant to me, how much quicker I could retire. And even if you're going to outsource, look, I don't do every component of my portfolio myself, right? I deal with Blackstone a lot on some of the real estate, but I understand everything. I have the overall framework. I'm the CEO, and then I'm hiring the CFOs of different areas to help me out that portfolio. So you have to have that roadmap in finance. I teach people that. And as an entrepreneur, I've got a step-by-step structure framework of how to build your business, sell your business step by step. That took me about 10 years to build. I built it through some of the best strategy professors at Wharton, UCLA Anderson, NUS, and some really, really smart entrepreneurs that I worked with over the years to put that in place to where, as an entrepreneur, the challenge is a lot of times you're running in circles, you're trying things, you're kind of grasping at straws, but there's really easier ways to do that. There's ways to minimize some of the risk, the cost that you're putting in things. There's strategic objectives that you should set out that you're measuring going on. And so there's an easier way for entrepreneurs. And so that's what I plan to do, is teach them first how to manage their money and then how to build, scale, and monitor a business for a successful exit.
Yeah, intelligently. Again, I'm a fool compared to what I should have been doing. Like I'm just learning now, like, oh shit, I should have been doing this. Like I blew so much money thinking, like again, look around, everyone walks in, wow, what an office. It's like, yeah, well, that's just me looking cool. How much money should I be making to have this office?
Right.
Because I don't know if I'm making that much, but I'm sure willing to spend it. Well, now looking back, if I would have just known what I've known now, it's like this office probably wouldn't be as fancy.
Right.
But I'd be 3 times more ready to rock. But again, I thought to myself, who cares? There's more coming.
Right.
I've always thought in abundance. I didn't think exit. I didn't think evaluation. I didn't think multiples. Foolishness. But if you're going to build a business knowing what you're going to teach ahead of time, I guarantee it will be far more valuable.
Oh, it absolutely will. Right. And that's the like they say, there's no substitute for experience. Unless you've gone through that, you don't know. The only way you do know is you get educated early on, and you believe those people who are educated, and you follow that path.
Well, I'm gonna have you back when your courses are finished. It shouldn't be too long, and we're going to talk specifically about that because I got a lot of people that are building businesses, entrepreneurial, and I think this is going to give them a lot of value. Real quick before we jam, one last question would be, if somebody wants to learn about money, like is there a book or where would you have them begin to start learning about money?
Yeah, I mean, the challenge is, Brad, I don't think there's any one place out there that you can go and you can get it all in one place. And this isn't about self-promotion. That's why I tried to create a course really in personal finance. What took me 20 years to learn as a professional in the industry, going through several different schools, to put it all in one place. It's going to be very inexpensive. It's not going to take you a lot of time. You're going to be able to get it all there. I don't want to send you somewhere that I don't believe in.
But right now there is not much out there?
It's not out there. I wouldn't be doing this. If I didn't think I could add value to the world by bringing this, I wouldn't waste my time.
Dude, I can't wait till it exists. Folks, go follow Rob at Rob Luna.
The Luna Rob.
Oh, it's the Luna Rob. At the Luna Rob, just like Luna, like Luna. Yeah. Follow him. I wish you had a book. You got a book? You don't have a book. Books. You don't have a website. You didn't have an Instagram.
Yeah, man, we're just getting there.
All these mega rich fools keeping you a secret.
I was busy building a real business.
Watch him on Fox Business every Friday at noon with old Charlie Payne.
That's it,
Charlie
buddy.
Payne. Hey guys, appreciate it. Next time, or throw this out to people that you know and you love, because someone that you hear or someone that you share this with would hear this and freak the hell out. Until next time, keep it real.